Welcome to the October 7th, 2019 Advance Report from McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, President, McGowanGroup, and your financial weatherman with your fast-paced weekly tour, an educational tour that can help you actually make better financial decisions. We are all about helping you to make the right decisions, to make good profits. And today I'm going to highlight our research process. Our investment committee meets. McGowan Group is a team of 10. The investment committee meets every Wednesday morning at 8:15 to cover the data behind the decisions we make in the model portfolios, and my capital is in those model portfolios as well as the team. I'm going to take you into some of that research here in just a second. The Dow plummeted 1,000 points at the beginning of the week, finishing around 26,400 after a bounce back. The most significant thing here is the recycled headlines that we keep hearing. Looming recession and trade wars. How long have we been hearing them? 2 years. The looming recession has been here for quite a while. You can actually find those headlines back as far as 2010, warning that we were going to go back into the abyss of '08. Well, a slowdown in growth is not the same as the 2002 tech wreck or the 2008 crash. It is something drastically different. Slowing growth. This chart has been our best indicator of what the Federal Reserve is going to do and potentially how the markets are going to react. What did we see all last year? The Fed raising rates. This year, they've cut rates twice. After this week, the T-bill went to 1.65%, a 52-week low, falling out from under the Fed's current target of 1 3/4 for overnight bank lending. What does it mean? They may have to cut rates again. October 30th is the next Fed meeting. Look at the Bloomberg probability that they'll cut rates by 1/4 in that meeting. 74% probability, and Bloomberg's probabilities have been the best indicator of what the Fed's going to do. What does it mean? They are infusing liquidity after tightening all of last year. What does it mean for the markets? Well, we'll find out, of course, on October 30th. What I do believe is that the Federal Reserve becoming more accommodative is part of the global slowdown that you're seeing. And it may in fact be the right reaction to stave off that dreaded, looming, scary recession that we've been hearing about for so long. So let's go deep into the research. Special thanks to Harrison Smith for taking the extra time as Client Support Director to do our spreadsheets. He's been working on these for over a year now, and it is one of the best research projects that I believe McGowan Group has done. World-class research, and I'm going to take you into the conclusions here. So here we go. I took 18 energy infrastructure companies into a basket, and we developed the spreadsheets, and Harrison got all the data for quarterly revenue, quarterly income, and put those into a multi-year spreadsheet for us. And I want to see how the basket of energy infrastructure companies is actually doing. Well, here's the price index for those companies. You can see they're just over half of where they were in 2014 when everybody loved the pipelines, MLPs, and master limited partnerships. And those pipelines invested in huge infrastructure projects. They overinvested. Oil took a bath, and you can see the result right here. Is the category at near half price underpriced? And what results are we getting? We went deep into it. These are some of the 18 leaders of the industries, all the way from Cheniere down to Williams companies. They did $262 billion in sales back in 2014. Keep in mind, the index is about half price, the basket of 18 companies in this example. And what does the revenue look like now? It took a dip here, certainly commensurate with oil and activity, but the shale revolution has led to a current $280 billion, more than 2014, even though these companies are about half price. Next year, almost $300 billion in revenue forecasted for the companies. That's the 20% increase for 18, and we look 19 over 18, about a 2%. But what happened with net income? They finished the pipelines, and that's why we see for net income, we look at all these numbers, net income 2018 over 17 is a 53% increase. That's huge. Looks more like a growth basket. Then we go 2018, 2019, this year over last year, 29% increase in the dollar income. How does it compare to 2014 when the index was almost double this? 13 billion. What are they going to make this year? 33 billion. They're on track at some point in the next 18 months to be clocking along at 3 times the profit they were making back in 2014, but the index is half. What do we see in the last quarter? Well, last quarter revenue was up about 3%. That's kind of an average for blue chip companies as it stands right now. That was, if we look at the quarterly revenues and the year to date, well, we're going all the way back here, not dissimilar to what we saw back in 18, but it's about a 3% increase. What happened to profit? If I compare last quarter to the same quarter a year ago, I've got an 80% income in the dollar amount that these companies booked as profit. That's an incredible increase, and to me it looks more like a growth index, but it's a fraction of the price of growth companies and a fraction of the price you'd pay for the very same companies when everybody loved them in 2014. The other category we're featuring in this week's Net Worth Radio broadcast is global high yield, and of course we'll talk about rates on good safety and income cash. And those rates have come down enough that it may drive capital into higher yielding assets over the next year. I'm Spencer McGowan, your financial weatherman. A pleasure to be with you with McGowanGroup Advanced Research, and that special shout out to Mr. Harrison Smith. He has become our data master, and we are glad to have him on board. We'll be back next week with your fast-paced YouTube tour. Be sure to subscribe to YouTube McGowan Group for fast-breaking alerts when your portfolio needs attention. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President McGowan Group, your financial weatherman. We sponsor each week NetWorthRadio.com broadcast. That has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast-breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as NetWorthRadio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who are devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to NetWorthRadio.com, the McGowanGroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to NetWorthRadio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast or any securities doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.